Hey everyone, Doug with Trade or Die Trying here. Today I want to do an analysis of SPY using Elliott Waves and Fibonacci levels. Take a quick look at my disclaimer here. If you have not seen it before, pause the video and read it. I'm not a licensed professional. This is not financial advice in any way. Any gains are your gains, any losses are your losses. And it is possible to lose everything that you invest. Okay, so obviously we've had a big sell-off lately. It doesn't, you don't have to be an advanced technical analyst here to see that. Take a look at this chart that we've sold off. We're in a correction. In fact, the definition of a bear market is 20% from the 52-week high. And I'm not going to get this exact, but where are we? We're somewhere around 18%. So we're pretty close to that bear market level. I wouldn't say, despite not being at that level, I wouldn't necessarily say we're in a bear market just yet. Obviously, there's a lot going on with the tariff news. There's a lot of geopolitical conflicts. There's a lot of things that could cause us to go into a bear market. But I want to take a look at this and just get context. This is not a prediction, but it explains the context behind the behavior of what the market is doing. Now, I love Elliott Waves. I recognize that not everyone loves them. There is a subjective nature to them, and that bothers some people or concerns some people. I don't take trading signals off of them. Again, I use them for context and understanding the larger movements and the larger degree of behavior in the markets. Okay, so we'll get right into it. I do have this built out already. I am on my other screen, but I want to build it out as I go so that you can kind of understand exactly what it is you're looking at rather than just seeing a bunch of lines. Okay, so I like to go, now you can have waves inside of waves, and we'll touch on that a little bit. You'll see me draw all this out. I want to start to the larger degree of an Elliott wave, okay? I'm going to go to the weekly chart here. Now, I'm going to start this Elliott wave around that COVID crash. I'm going to start it here, okay? Now, you might be saying, well, Doug, why aren't you starting it down here, right? I'm going to explain that to you, okay? I will start one here. This was the crash, the Great Recession in 2009, okay? So if we go back there, I'm going to go ahead and take a wave, and I'm going to make this, well, we'll draw it out first. Again, you could put a few people in a room and they could see a few different things when it comes to Elliott waves. You may not 100% agree with exactly how I draw them if you're an Elliott wave person, but I'll look at the different areas where we can draw them. But I'm going to go 1, 2, I'm going to skip that 1, and I'm going to do 3, 4, and 5. Yes, there was a consolidation in here, okay? I like to have the MACD down there. You can also use the awesome oscillator because that helps you see the waves, okay? The largest peak, typically, we have large peaks in here, is usually around the third or the fifth leg. Now, some people might come in here and say, this is the fifth leg, or this is leg 4, and this is leg 5. Okay. There was such a big sell-off here and a reset. I don't care for having. To me, that looks like a correction from wave 5. That's why I'm keeping wave 5 down here. Okay. If we go to the daily chart, let's take a look here. I'm going to be flipping back and forth a little bit. This was a pretty big sell-off, but you actually see a little bit of an ABC in here. And I'll show you that here. After a impulse wave, you typically have an ABC correction before it then either starts a new wave or goes into a consolidation. Okay, so that's kind of my justification for having this be the end of wave 5. Okay, and if you've studied Elliott waves, you'll understand. Usually, you have an impulse wave followed by an ABC correction. Okay, and I see that in here. Again, you can ask a handful of different people and see a few different things, and that's kind of what happens with Elliott waves. Okay, but the more you do it, the more you start to see rules kind of come into play. This usually waves 2 and 4. One is a little more complex than the other. So if you have a simple one, you'll have a more complex one. To me, I see, complexity here versus this one. This one's a simpler dip. I'm going to go with 1 through 5 there with an ABC correction, and then starting a new impulse here. Okay, so what I see when I look here is a 1, 2, a 3, and then we haven't completed the 4, but we are in a 4 here. Okay. Well, yeah, you have to close the wave out there. Usually wave 5 will go a little bit higher. Sometimes it truncates and stays lower, but it'll usually go a little bit higher. Okay. This is a high point of the wave. This is the highest peak here, and then it continued to go up. So I'm seeing that as a wave 3. Okay, so starting from the 2009 financial crash, I go up 1, 2, 3, 4, 5, and then I see an ABC correction and go 1, 2, 3. Now, again, I could see a case if you wanted to do something like this. The problem there is that you continue to go higher. And then you have a big ABC correction. It's hard for me to justify this being the end of the wave with this being the start of a new one. You can't have wave 2 going below wave 1. So I just don't see that being the wave. Although someone might be able to make a justification for it. This could be wave 5 here, or you could say your wave 5 is there. Either way, even if you had this section being your wave 4, that's more complex than wave 2, it still meets the rules. Okay, so that's currently what I'm seeing. Okay, the nice thing about this is that we still see some impulse taking place in the market. Okay, if this level holds, then we could see it going up into a wave 5. Again, that could truncate and not break wave 3. Or it can go up a little bit above, okay? But right now, this is what we're dealing with. So what I'm going to do is we've got the larger waves drawn out. I'm now going to go ahead and go back down to the daily chart. And this is something I like to do anytime I'm getting into a stock, if I'm going to wheel a stock, or do a put credit spread, aka bull put spread. I like to draw these waves out, and I like to go to the larger degree to see the overall movement in the market. Okay, now this is the start of this current wave. Okay, what we can do is, as I mentioned before, you can see waves within waves. Let's see. I see. Okay, let's go here to show the most recent leg, okay? I see a 1, 2, 3, 4, 5, okay? I'm going to make sure, because like I said, I did draw these out earlier on to make things a little faster. I want to make sure that on the spot here I'm not messing anything up. Everything matches. You could make a case. Yeah, see, there's a divergence here. I'm looking at the MACD with all this. Yeah, this last leg of this wave 5 diverges, and that's one of the telltale signs that you've hit a wave 5 also. Diverges compared to the MACD. Okay, so you see a little bit of a divergence there. Okay, so we like I've said before, you have waves within a wave. Each of these impulse waves will typically have 5 waves within them. I'll go ahead and make this blue, and then I'll probably get rid of it because we don't want a chart full of waves after waves after waves. Okay, over here you can see that this was, obviously you can see it went down, but you'll even see some of the behaviors in here. 1, 2, 3, 4, 5, and then in some other dips you see, that's with the larger degree there, and then you can even see that in here within this wave 2. We can put another one in here. 1, 2, 3, 4, 5. This is typically how the market likes to move. I'll make that one red because it's a lower degree. Okay. Now, sometimes the 2 and the 4 they can either be 5 waves or they can be an ABC. And we'll see that here. A, B, C. Okay. So we can validate this this third leg of the impulse wave by seeing 1, 2, 3, 4, 5. Okay. We have a more complex with a 5-wave correction here, or pullback, I should say. Sorry, not correction, but a wave 2 pullback. And we have a less complex one here with an ABC. So that meets our rules, okay? All the other rules are met. I'm not going to go into that in a ton of depth, okay? But that validates here that we had a wave 2. We're about to have a wave 4. We are in a wave 4 from what I see. And this leg, wave 3, was validated by a 5 impulse wave within it, and waves 2 and 4 were both simple and complex. Okay, so that's how you can validate the waves that you're drawing. You typically have waves within waves, and you have your 2 and 4 pullback. One's more complex than the other, and you can draw these ABCs and these 1 through 5s within those. And that helps you understand and again, validate and confirm what it is you're looking at. Okay, now, again, I'm going to delete some of these because it gets to be a little crazy when you're looking at the chart. This is our overall wave, okay? We had, I'm going to put this one back on because it's somewhat relevant. Four and 5, okay? This was a complex pullback, okay? And as I've mentioned before, when you have waves 2 and 4 on your pullbacks, you have complex and you have one that's complex, one that's simple. You rarely have 2 that are complex or 2 that are both simple, okay? And what you'll notice here is it is following that behavioral pattern because we have an A, B, C, okay? So that confirms to me that we very easily could have this simpler pullback within a wave 4, telling me that there could be some more room for this market to go up in the long run. Again, if the tariff war gets crazy, if global conflicts start to get out of hand, we have bad economic data, a lot of things can throw this off, okay? But right now, this is the behavior that we're seeing, and this is the context we're seeing, okay? Now, what we can do is we can take Fibonacci and we can look at this third leg. Okay, I don't know, I'm going to get it exact here. You don't necessarily need it exact. I like to try and get it somewhat close. Yeah, it's pretty good. And then we have up here, also pretty solid. Okay, now in Fibonacci, you have what they refer to as the golden zone. That's between the 382 and the 618 retracement. Okay. So the golden zone here in this leg 3 right now is, I'm going to draw a box. It's right in there. Okay. It's from this 382 level to this 618 level, okay? Can I make this a little bit lighter? Okay, so we've drawn that Fibonacci out, okay? We can also draw a Fibonacci. I'm going to delete this now. Or actually, I can use it. I can just repurpose it here. If we bring this up to this leg here, okay, we also have a golden zone right in here, okay? Now, I'm going to make this one, I'll make it blue to kind of help the eyes, okay? So we have a couple of golden zones in there. Now, which one will it respect? We don't always know right away. I'm going to put a line down here because this is a 786. So I'll put a line in there. I'll make that a light blue. Okay? And if I bring this out here, we have a 786 down here as well. Okay? These are just levels to be watching and looking at and seeing how price reacts to them, okay? Now, this blue line was the 786 level of the retracement from here to here. This blue line was the 786 level of the retracement here to here. And then we have our two golden zones here, okay? Now, you'll notice, and I'll get rid of this thing here, showing we're in an ABC pullback. You'll notice that right now, price is reacting to the bottom of this golden zone of our smaller fib retracement, okay? It has shot down pretty far, and let me zoom in a little bit here. You can see there's a wick down here, okay? So it broke this level and then popped back up and started moving back up, okay? So that's something we want to keep an eye on, okay? Because if it starts to hold there, we'll see that it's respecting this level. Now, it could go sideways for a little bit, depending on what's going on, or it could start to resume a wave 5. That would be really nice, right, to resume a wave 5. And as I've said a couple times, wave 5 can truncate, which means it ends somewhere down around here, or it can go up to the 1272 level on the Fibonacci, okay? One other thing that is kind of neat here, if we put a Fibonacci level here to look at an extension, that's the top of that down to this first A wave, because I had the ABC drawn. Okay, now what I'm going to do is I'm going to flip this over so we can see our extensions. And if you look, what I did was I drew a Fibonacci from this first A wave, okay? So going back to here, I said A, B, C, okay? I drew it from up here down to the bottom of this A wave, okay? And we want to see as B pulls back and then C starts to go, how far is it going to go, okay? And again, we want to look at levels because we want to see how price starts to react around those levels. What you'll see here is a 2 extension, which means it has doubled, wave C has doubled the length of wave A, okay? That is significant, all right? I'll put another line in here and make it green to show that that was the 2, the double Fibonacci extension compared to wave A, okay? And I'll get rid of this because I know when you put a lot on the chart, it can be tough to watch. Okay, so overall what I'm seeing here is I talked about the original impulse wave that then had an ABC correction, and I justified those. Again, you could get a couple other people that look at this and see a couple other different waves. I don't claim to be perfect. I have used Elliott Waves a lot. They've treated me really well. I love them, and I continue to use them with a good bit of success in understanding the overall market structure and behavior of the market, okay? So we are in a larger degree impulse wave. We see that the rules of 2 and 4 are being followed so far. Pullback 2 was very complex with a 5 wave within it, and pullback wave 4 is simpler with an ABC. It is starting to respect the 2 Fibonacci extension of wave A. It's respecting the 618 in the golden zone of this shorter Fibonacci measurement, okay? And it's within the golden zone of the larger Fibonacci measurement, okay? There's a lot of levels here right now that it's respecting. If it breaks, we're going to see it probably come down and start flirting with this level down here. That's around the 445 to 455-ish level. Okay, that's a much, much larger sell-off. Okay, don't put it past the market. It can do that. It would be, somewhere around a 26% sell-off, and that could certainly happen. But with the 618 of this Fibonacci measurement, the 2 extension from wave A on wave C, and being within the golden zone of the larger Fibonacci measurement, I'm going to be watching this closely to see how it respects that, because there's a very good chance that it does respect it and could potentially start going sideways or start making a leg 1 upward. Okay, again, you're gonna have 5 waves within this 5th leg if we get this 5th leg. Okay, I'm just gonna draw something hypothetical. Okay. Okay, you would get 5 waves within that. Okay. It could potentially start doing that. We had a lot of volume here, as you can see the volume bars down here. Tons of volume. We saw it respect these levels on high volume. So this is something to be keeping an eye on to understand what it potentially could be doing here as far as its overall behavior. I think there is a case to make to say that we could have wave 5 go a little bit higher than wave 3. But again, with everything going on politically and geopolitically, we could go sideways for a while. Who knows? I think there is a case to say that a lot of this sell-off could be over. But again, there's some other levels down here that you could be taking a look at if it breaks this. So one day at a time, we'll see what happens. But it is definitely following our rules. It's following the behaviors of Elliott Waves with its pullback. And it'll be exciting to see what happens from here. All right. Thank you, everyone, for listening to me go on and on. Much appreciated. And I look forward to watching everyone make money. Take care.